Hello traders, the title of the video is how to combine the RSI divergence and a price structure like a pro. Alright, so you want to learn and master the RSI divergence trading like a pro. One of the tips and tricks that one can use is to combine the RSI divergence and the price structure. Alright. I have here, I'm on the monthly chart, the financial instrument that we are analyzing is Hologic Incorporated, EPIC HOLX, Hotel Oscar Lima X-ray. So here we can see that I have the RSI period 14 on my chart. You can see that the RSI exhibit displays a higher high here, followed by a lower high. This is the RSI forming a lower high at the same time when the price is forming a higher high. This is what we call a bearish divergence. The momentum oscillator is displaying a lower high at the time when the price is displaying a higher high. So we are connecting the high to another higher high on the price, and we are connecting a high and a lower high on the RSI. Okay, so this is a bearish divergence. Now, how do we combine that RSI divergence with the price structure? What you need to look for is this price move here, 1, 2, 3. So whenever you see the RSI divergence like this, check out whether they move from here all the way up here to form the top. Okay, after this pullback here, so it goes up first, it pull back. If after the pullback the price move up 1, 2, 3, we have a valid bearish divergence. So we'll wait for the common central lines here to be kaput. The common central line along this price move is kaput, which means this candlestick bar here is closed. All right, you see it's closed, and then we implement a top-down trading method to sell it down. Do not just sell it. If the common central line is broken, use a different time frame trading method to trade it. So here, as a swing trader on a monthly chart, because you see this candlestick bar that breaks that common central line is a long candlestick bar, will highlight the high, the low, and the median line of that long candlestick bar, this one here. After that, what we are looking for after this candlestick bar is open, right, we want a rally into the median line of that long candlestick bar. That's the best place to look for the sell signal. But the whole point that I want you to understand is that anytime you see the RSI exhibiting a bearish divergence, forming a high and a lower high, and we see that the price went up 1, 2, 3, at the point where the RSI was exhibiting a lower high, but the price is showing a higher high, we want to check the price structure. And the only price structure that we are looking for is the minimum price move 3, 1, 2, 3. Here, as soon as this candlestick bar is closed below the common central line, we have a bearish trading setup. We will now use a different time frame trading method to sell it down as a swing trading. Even for day trading, we can sell it down. But understand that if the candlestick bar that breaks that common central line is low, we highlight the high, the low, and the median line. And if the second candlestick bar is open, we want a rally into the median line. This is exactly what has happened here. You see, as this candlestick bar opened here, it went up a bit before people sold it down. All right. And if the price is going down, don't leave too much money on the table. Look again as the price going down. Look for lower high. If the price went down and rally up, look for another opportunity to sell. If it goes down, form a new lower low. This is very important. If the price declines and form a new lower low and rally up, that's another invitation to sell on the edge of the bearish trend line. So this is what has happened here. But in all cases, very important, use different time frame trading method. All right. So you look at this one here. So we are here now. So if you are interested to try this one or to practice, very important. If you haven't mastered this strategy here, the best approach is to practice, use the demo account until you master it. So if you want to practice with this one, so we see again the price went up and then it pulled back. Now it start going up. All right, that's very important for us. Now we want to check the price structure. So it went up like this, All right, you see here, and then it pulls back. Okay, now it's going up again. So that is the minimum price move is free. A lot of traders will say, yes, that's exactly what is happening here. We have a bearish divergence. Now you can see that the RSI did not turn yet, but we will put this one on our bearish watch list. So we'll say, okay, it is a bearish divergence that is developing. All right, it's developing. It's not yet ready. It's not yet cooked, so to speak. All right, so we will say, all right, the RSI is about to form, okay, a lower high. All right, it's about to form a lower high, and the price is forming a new high, but it's not perfectly clear to us yet. So what do we need to do? Practically speaking, we will draw the common settling line here. You see now, you draw the common settling line very close to the price like this, and you just leave it there. If at the end of this month, we are now in the month of July 2017, okay, if that monthly candle bar close below that common settling line, we have a bearish trending setup. If that candle bar that is closing below the common settling line is a long candle bar, as it was here, we will highlight the high, the low, and the median line. And if the following candle bar opens, normally the professional will want a rally into the median line of the long candle bar. Sometimes the price may not do that; it will do something else. But what you need to understand is that when the RSI display a lower high and the price form a higher high, we have a bearish divergence. Now we want to check the price structure. The move up here is it 1, 2, 3. All right. So it looks like this is what's going to happen now. So what we need to do is to put a line there and say priority to bullish signal above the level of $45.96 and priority to bearish signal below it. Only if the price breaks below a close below the common settling line here, then we have a bearish divergence confirmation. Then we will implement a different time frame trading method to trade it. So combine the RSI divergence with the price structure 1, 2, 3. So I have done my drawing here. Price is going up first and then it pull back. So now we have the first high here for the price action, which is here. Now if it goes up 1, 2, 3 to form a new high is the move up that is forming the new high that we are paying attention to, talking about the price structure. If it goes up 1, 2, 3 before forming the new high, we will wait for the common settling line to be kaput. All right. If the RSI also exhibits a lower high, then we have a bearish divergence trading setup. We will now implement a different time frame trading method to trade it. The opposite is also true in a downtrend. Financial instrument goes down from a low and then rally up a bit. Now, if the move down to form the new lower low is 1, 2, 3, and the RSI exhibits a bullish divergence, which means the RSI form a low and a higher low. So we are comparing the low when we are talking about bearish divergence. The price is forming a low and a lower low. Okay, and the RSI is forming a low and a higher low. That is a bullish divergence. But if this move down 1, 2, 3 is free. If the price moves down to form the new lower low, is subdivided into 1, 2, 3. We will now we can draw a line here and say priority to bullish signal above and priority to bearish signal below. And if the common settling line is kaput and a bullish candle bar close above that common settling line, we have a bullish divergence, RSI bullish divergence trading setup. Now, one more time, if the candle bar that closes above that common settling line is a long candle bar, we will highlight the high, the low, and the median line. And if the next candle bar is open, we would like it to pull back a bit to retest the median line of that long candle bar. But that doesn't mean that whenever we have a long candle bar and the following candle bar is open, we'll always have that rally into the median line. It doesn't mean that. Sometimes you may see that clear-cut rally into the median line of the long candle bar. Sometimes they probably just continue to go up or down. Okay, so this is about how to combine RSI divergence and price structures like a pool. All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. So as things stand down, we will put this stock on our bearish watch list and monitor whether the RSI will form a clear-cut lower high here. If that is the case, all right, and the common settling line is broken, that candlestick bar must close, must close, must close. Once it's closed, all right. If it's a long candlestick bar, we hide the low immediate line. If not, we implement a top-down trading method straight away. All right. Talking about top-down trading method for new traders who are not yet subscribed to our channel. If you are a daily chart, the daily chart will be for your trading setup, the hourly time frame for the signal, and the 10-minute time frame for the entry. So if you see the RSI divergence on the 4-hour time frame, the 4-hour time frame will be for your trading setup, the 15-minute time frame for the signal, and the 3-minute or 5-minute for the entry. See on the weekly chart, weekly time frame trading setup, 4-hour time frame or 2-hour time frame for the signal, and the 15-minute time frame for the entry. All right, and so on and so on and so on. All right. So remember, the RSI bearish divergence with the price structure is only giving us a trading setup when the price breaks below that common settle line. Now we will now follow the trading drill. A trading setup does not guarantee a trading signal. We want to follow the trading drill. Okay, the trading setup is now in place. If this candlestick bar closes below that common settle line, okay, once the setup is in place, now we use the setup, we use another different time frame for the signal. We go to the signal time frame, we switch to the signal time frame, and if the signal is fire, we switch to the entry time frame for a low risk entry point. Sometime, my friend, you may have a trading setup, a valid trading setup, or let's just say we may have a trading setup. We put that stock on our bullish watch list or bearish watch list, but sometimes the signal may not happen, which is the negation of that trading setup. So if we have a negation of a bearish divergence, that means that we should buy instead. If we have a negation of a bullish divergence, it means that in that case we must look for an opportunity to sell instead, because that bullish divergence has failed. The setup has now changed. The market sentiment has changed. All right. So very, very important subject, talking about RSI indicator or RSI oscillator. The RSI stands for Relative Strength Index Indicator, a momentum oscillator that allows technical traders to pinpoint bullish stock and bearish stock. However, we can use the RSI divergence to pinpoint stock that are ready to go down. I'll use the RSI bullish divergence to pinpoint stock that are bound to go up. I'm recording this video today because a trader asked me to record a video about a powerful reversal. If you are looking for a powerful reversal, there is one here, the RSI bullish and bearish divergence with the price structure. So remember the drawing here, price goes up, pull back, and then if you go 1, 2, 3 to form a new higher high, that's a bearish divergence, provided that the common settle line is broken and we have a valid signal. Sometimes you may have a valid trading setup and a valid signal, but if you go to the entry time frame, if the risk is too high, you do not have to take the trade, because you want to take into consideration also the risk. It's not because you have a valid trading setup, a valid signal, that you must buy, you must enter the trade. No. If you go on the entry time frame and the risk is, suppose you were somewhere here, all right, and the signal is up here, but in order to enter the trade on your lower time frame, probably you have to place your stop. The best place to place your stop loss, if it's 100 pip or 200 pip for day trading, you will not take it, because you're going to risk more than you will gain. Then you will ignore that signal, though the signal is in place. This is one thing that traders should pay attention to, especially when they are using trading systems. Sometimes a trading system may fire a signal, but the entry will be completely useless. Therefore, we will ignore the signal. All right. So this is it. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is another useless recording from George, all right, let us know by giving us the thumbs down, and this will put us under pressure to improve our next recording. All right, very, very important. So we appreciate your rating, your comment, your interaction on YouTube. This is making us a better YouTube creators. All right. But if you find this video you think that this video is an essential tutorial for RSI traders, for divergence traders, feel free to share it with your friend on Google+, on Twitter, and also on Facebook. That will be very, very helpful for us, which means other traders will come and subscribe to our channel, and we will have a better a discussion. All right. Until the next time, enjoy yourself. and be very happy. Reality STW24 traders talking about how to combine RSI divergence and price structure like a pro. Happy trading to you all and speak to you soon.